government have is that there will be 200 million unemployed people in the streets. They have come in from the countryside. If they lose their jobs and suddenly they don't have a home, they can't afford an apartment, they can't afford a place to live, and they're in the streets of Shanghai and Beijing, what's going to happen? That is the biggest fear that they have in China.
Do you think that the Chinese stock market is anticipating some of this change by being off already 50% from its peak?
Absolutely. It's actually down about 58%. And so that is already built in, and nobody seems to be paying attention to it. It's just absolutely amazing. People still seem to have the impression that China is booming and everything is wonderful. And, you hear people asking the question, well, is the Chinese market going to go down after the Olympics? Gosh, it's already down 58%,
In a strange metaphor, the Olympics, what we're seeing right now on TV, we're still seeing that there's someone behind the curtain. Even this little 7-year-old girl who sang at the opening ceremonies, turns out she wasn't singing at all, but there was a girl behind the curtain singing for her. So doesn't it seem like a metaphor of maybe the impression may not necessarily be the reality?
Exactly, and I think a lot of people, a lot of visitors from the West that will come back from China, they will have recognized that, and they will be sellers. They will say, gee, this is not as wonderful as we thought it would be. And, there's a lot of image playing going on. Also the fireworks. They had videos of fireworks. They weren't really the fireworks at the opening ceremony, just so it looked better on TV.
Well, it's interesting to me, Bert, because there's a lot of sort of contrarian investors who would say, yes, betting against the U.S. market makes sense today, but actually going overseas is where you should go. I haven't bought that argument, but it sure is popular. Sounds to me like you'd view that as jumping from the frying pan to the fire.
Oh, absolutely. You want to stay in the U.S. At least we have accounting standards, we have rule of law, etc. How many big companies have been caught in the U.S. cooking their books? MCI comes to mind, Enron, etc. And we have the toughest accounting standards of any country. What do you think it's like in China? In China, a lot of companies that had gone public, they were taking the money and speculating in the Chinese stock market. And, of course, they were able to produce huge gains in some of these stocks. Well, now, that went into operating earnings. Okay, so when they showed their earnings, everybody thought, gee, they're making a lot of money. Well, they were making a lot of money on their speculations, but not in their business. Now, those profits are no longer there. And, in fact, those speculative profits have turned to huge losses with the stock market decline. So that will be the next phase. They're going to have these huge losses. They will not want to report them, so then they're going to start cooking the books, okay? And so, I don't want to be exposed to that. If you want to invest, try to find a good investment in the U.S. It's going to be tough over the next several years. But at least you're taking a business risk instead of the risk that somebody is giving you phony numbers.
Well, I just want to say, Bert, I've enjoyed your book, Prelude to Meltdown, and would encourage all of our listeners to order a copy. It's $15 well spent.
Well, thank you very much. There's a website, meltdownbook.com, where people can get more information on the book and order it.
And secondly, I'll just repeat that, meltdownbook.com. It's about $15 and definitely worth every penny. I would also suggest for those of you who like technical analysis, those of you who are listening, his newsletter, the Wellington Letter, goes back decades. It goes back decades. This is a letter that Don and I have been familiar with for a long, long time. Obviously, Don, a lot longer than I was. In fact, Bert, you and Don were giving speeches on the same platform going back 25, 30 years, and you were still writing the letter back then, if I'm not mistaken.
Yes, the Wellington Letter is now in its 31st year, and yes, Don and I have known each other for about that same period of time, and I've always appreciated his views and highly respected him, and I think we did a couple of seminars together.
Yeah, well, we look forward to that in the future as well, and would encourage our listeners to both look at the Wellington Letter at dohmancapital.com, DOHMEN, capital CAPITAL.com, or go to meltdownbook.com and look for Prelude to Meltdown.
Once again, you've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick, along with David McAlvany, and our guest today, Bert Dohman.
Thank you very much, gentlemen.
Bert's going to be joining us next week at the same time on this same program.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.